fintech company most people outside emerging markets have never heard of just pulled in $51 million to expand a financial system that bypasses traditional banks entirely. Fasset's Series B round isn't just another crypto headline. It signals a quiet shift in how money moves across borders, especially where banking infrastructure is weak or inaccessible. Backed by SBI Group, Investcorp, and Ars Portfrey, this funding round marks one of the largest this year for a company building what's increasingly being called stablecoin banking. The real story isn't the money itself, but what it reveals. Institutional capital is now flowing decisively into blockchain-based financial services that serve real-world users, not just crypto traders. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Fasset operates a platform that uses stablecoins to power banking and payments across Asia, Africa, and the Middle East. The company says it supports over 50 payment corridors and processes more than $32 billion in annualized transaction volume. That scale matters. This isn't a pilot project or a niche experiment. It's active, regulated financial infrastructure handling real money flows for freelancers, small businesses, and exporters who need faster, cheaper alternatives to traditional wire transfers. The new capital will go toward expanding operations, strengthening onchain payment rails, and launching new products like lending and trade finance, services that are often out of reach in volatile or underbanked economies. By integrating stablecoins into existing financial touchpoints, the company is effectively building a parallel system for cross-border payments. This isn't about replacing banks, it's about creating alternatives where banking services are inconsistent or exclusionary. But the expansion of stablecoin banking comes with unresolved tensions. Regulatory clarity remains uneven across jurisdictions. Rules around digital asset custody, anti-money laundering compliance, and reserve transparency vary widely, forcing companies like Fasset to navigate a patchwork of licensing requirements and banking partnerships. While regulators in some regions are developing frameworks for regulated stablecoin use, others remain cautious or outright hostile. This creates a constant balancing act, scaling quickly to meet demand while staying compliant in a fragmented legal landscape. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The deeper implication is this. The future of global finance may not be built in Wall Street boardrooms, but in the corridors between Lagos, Jakarta, and Dubai, where stablecoin infrastructure is proving its utility every day. The next signal to watch isn't another funding round. It's whether Fasset and similar platforms can integrate with regulated banking systems at scale, turning parallel rails into mainstream pathways. The $51 million round proves the concept has legs. But long-term success depends on trust, compliance, and the ability to coexist with, not just circumvent, existing financial frameworks.